Learn from Cathie Wood, 5 secrets to picking explosive growth stocks. Welcome to the Investors Community channel. Today, we're diving deep into the world of explosive growth stocks, and who better to learn from than the queen of disruptive innovation herself, Cathie Wood. Now, whether you agree with her strategies or not, there's no denying that Cathie Wood has made a name for herself by identifying and investing in companies that are changing the world. If you're ready to learn the secrets behind her success, and potentially uncover your next big investment opportunity, then buckle up, because this video is for you. We'll be breaking down 5 key takeaways from Cathie Wood's investment philosophy, so you can start applying them to your own portfolio. And hey, if you enjoy our content, be sure to hit the like button and subscribe for more valuable insights. We're all about empowering investors of all levels, so let's grow together. Long-term vision, looking beyond short-term gains. Now, one of the most fundamental principles of Cathie Wood's investment strategy is her unwavering focus on the long term. See, Cathie's not interested in chasing quick profits or timing the market. She's playing the long game, and that means identifying companies that she believes will be the giants of tomorrow, even if they're relatively small or unknown today. Think about it, companies like Amazon, Tesla, and even Bitcoin were once considered risky bets. But Cathie saw their potential early on and held on to her investments, even when others doubted her. And guess what? Her long-term vision paid off big time. So, what does this mean for you? It means tuning out the noise of short-term market fluctuations and focusing on the bigger picture. Don't get caught up in the day-to-day swings of the market. Instead, look for companies with solid fundamentals, strong leadership, and most importantly, a disruptive product or service that has the potential to change the game. Remember, Rome wasn't built in a day, and neither are successful investment portfolios. Patience and a long-term perspective are key. Cathie Wood understands this, and it's a big reason why she's been so successful. So ask yourself, are you thinking short-term or long-term? Because your answer could make all the difference in your investment journey. Capitalizing on disruptive innovation trends. Cathie Wood is known for her laser focus on disruptive innovation, a term that has become synonymous with her investment strategy. But what exactly does that mean, and why is it so important in today's fast-paced world? Well, it's about identifying companies that are developing groundbreaking technologies or business models that have the potential to shake up entire industries, fundamentally changing the way we live and work. We're talking about companies at the forefront of artificial intelligence, genomics, robotics, and other cutting-edge fields. This includes innovations like autonomous vehicles and 3D printing, which are set to revolutionize their respective industries. These are the kinds of companies that are pushing the boundaries of what's possible and creating entirely new markets in the process, often disrupting established players. Now, investing in disruptive innovation isn't just about picking the next hot tech gadget or trend, it's about understanding the underlying trends shaping our future and recognizing the long-term potential of these innovations. Cathie Wood and her team at ARK Invest spend countless hours researching and analyzing emerging technologies to identify those with the greatest potential for growth, often before they become mainstream. They're not afraid to invest in companies that are still in their early stages of development, as long as they believe in the long-term vision and the team behind it, which is crucial for success. And this willingness to embrace the unknown and take calculated risks is a big part of what sets Cathie Wood apart from more traditional investors. So how can you apply this to your own investment strategy and potentially reap similar rewards? Start by staying informed about the latest technological advancements and industry trends. Read industry publications, attend conferences, and engage with the community. Follow thought leaders in the fields that interest you, and don't be afraid to dive deep into the subjects that could shape the future. The more you know about the future, the better equipped you'll be to identify the companies that are shaping it and make informed investment decisions. Remember, fortune favors the bold, and those who are willing to take risks often find the greatest rewards. In the world of investing, that often means being willing to embrace disruptive innovation and the potential it holds for transforming industries and creating new opportunities. Now, while Cathie Wood is known for investing in companies that are often unprofitable in the present, she's not just throwing money at any company with a cool idea. Her strategy is much more nuanced and calculated. She's laser-focused on revenue and profit growth potential, always looking for the next big opportunity. See, Cathie understands that for a company to succeed in the long run, it needs to generate revenue and eventually turn a profit. This is a fundamental principle that cannot be ignored. So while she's willing to be patient with companies that are still in their early stages, she's looking for evidence that they have a clear path to profitability. This means having a solid business plan and realistic financial projections. She pays close attention to metrics like revenue growth rate, gross margins, and customer acquisition costs. These indicators help her gauge the company's potential for long-term success. She wants to see that companies are growing their top line rapidly and that they have a scalable business model that can generate profits as they scale. Scalability is key to sustaining growth. One of the biggest mistakes that new investors make is getting caught up in hype and investing in companies that are all sizzle and no stake. They get dazzled by flashy presentations and big promises. They see a company with a catchy name and a flashy website and assume it's going to be the next Amazon. But this is a risky approach. But Cathie Wood knows that true success in the business world is built on a foundation of solid financials. Without strong financials, even the most exciting companies can falter. So, before you hit that buy button, take a close look at the company's financials. This means diving deep into their earnings reports and balance sheets. Are they growing revenue consistently? Consistent growth is a good indicator of a company's health. Do their margins make sense? Healthy profit margins are crucial for long-term sustainability. Don't just rely on hype or speculation. Hype can be misleading and often leads to poor investment decisions. Look for companies with a proven track record of growth and a clear path to profitability. This is what separates the winners from the losers in the long run. Remember, investing is a marathon, not a sprint. Patience and due diligence are your best allies. And companies that can generate sustainable growth are the ones that will ultimately win the race. These are the companies that will stand the test of time. Now, this one might seem counterintuitive, especially after we just talked about the importance of revenue and profit growth. It's natural to think that investing in companies that are not making money is a bad idea. But here's the thing, Cathie Wood is not afraid to invest in companies that are not yet profitable, and in some cases are losing money hand over fist. She sees potential where others see risk. Why? Because she understands that disruptive innovation often requires significant upfront investment and that companies may need to operate at a loss for years before they reach profitability. This is a long-term game. Think about Amazon, for example. It's a classic case of a company that took years to turn a profit. Amazon famously operated at a loss for years as it plowed billions of dollars into building out its infrastructure and expanding into new markets. This strategy was risky but visionary. But investors who were willing to stomach the volatility and look past the short-term losses were handsomely rewarded as Amazon eventually became one of the most profitable companies in the world. Their patience paid off. Now, this is not to say that you should go out and invest in every unprofitable company you can find. Not all of them will become the next Amazon. Investing in unprofitable companies is inherently risky, and it's not suitable for everyone. It requires a certain level of risk tolerance and a deep understanding of the market. But if you're comfortable with a higher level of risk and you believe in the long-term vision of a company, then investing in an unprofitable company can potentially lead to outsized returns. The rewards can be substantial. The key is to be selective and to do your due diligence. Research is crucial. Don't just invest in an unprofitable company because Cathie Wood is doing it. Make sure you understand why she is investing. Understand the company's business model, its competitive landscape, and its path to profitability. These factors will help you make an informed decision. And remember, diversification is key. Spread your investments to manage risk. Don't put all your eggs in one basket, especially when it comes to high-risk investments. A well-diversified portfolio can help mitigate potential losses. One of the things that sets Cathie Wood apart from many other fund managers is her commitment to transparency. ARK Invest, her firm, openly shares its portfolio holdings and its investment strategy with the world. You can go to their website right now and see exactly what stocks they're buying and selling and how much they're investing. This level of transparency is almost unheard of in the world of finance, where secrecy and exclusivity are often the norm. But Cathie Wood believes that sharing her insights makes her a better investor. By being open about her thought process, she invites scrutiny and feedback from others, which helps her refine her strategies and identify potential blind spots. Now you might be thinking, why would she give away her secrets for free? Well, for one, it's part of her mission to democratize access to financial information and empower individual investors. But it's also good business. By being transparent, she builds trust with investors and attracts a loyal following. So, what can you learn from Cathie Wood's commitment to transparency? Well, for starters, don't be afraid to share your investment ideas with others. Talk to other investors, join online communities, and participate in discussions. The more you share your thoughts, the more you'll learn and grow as an investor. And don't be afraid to admit when you're wrong. Everyone makes mistakes, even the best investors in the world. The key is to learn from your mistakes and move on. So there you have it. 5 key takeaways from Cathie Wood's investment philosophy that you can start applying to your own portfolio today, no matter your experience level. Remember, investing is a journey, not a destination, and it requires patience. There will be ups and downs along the way as the market is always changing, but by focusing on the long term, embracing innovation, and staying informed, you'll be well on your way to achieving your financial goals and dreams. What do you think about Cathie Wood's investment strategies and her approach? Let me know in the comments below. I'd love to hear your thoughts. And hey, if you found this video helpful and informative, be sure to give it a thumbs up to show your support and subscribe to the channel for more investing insights and tips. See you in the next video. Take care and happy investing.